Okay, so good morning everyone. So in this video, we will continue the discussion with our present topic, liabilities. So from the past two videos, we have already discussed the concepts and principles in relating to liability. So for today, we will put all those concepts and principles into application, hoping na with our discussion today, mas maintindihan nyo pa ang topic. Okay? So, let's start. So, for question number 1, question is, the most common type of liability is, so, letter A, one that comes into existence due to a loss of contingency. Letter B, one that must be estimated. Letter C, one that come into existence due to a gain contingency. And the last choice is one to be paid in cash and for which the amount and timing are unknown. Okay? So, based on the given choices, guys, actually, if we are to look at the choices, these are not common liabilities, no? So, all these four choices, in essence, these are not common. However, based on the choices above, the one that is closest to the definition of being a common type of liability is letter D. Okay? So, why letter D? Now, if you talk about letter A, or if you look at letter A class, this is not yet a liability. Why? Because again, the term used, it is still a contingency. So meaning, hindi pa siya klaro kung mangyayari talaga, no? Dependent pa on the happening of a condition. So wala pa talagang existing liability. So definitely, letter A is not a liability. That goes the same with letter C. Okay, again, these are still contingency. Okay? Letter B, on the other hand, this is not a definition of what is a liability. It is not a requirement that for a liability to be recognized, it must be estimated. So basically, this is not a liability. Okay? So the answer for number 1, letter D. Why? Because if we are to understand letter D class, no? One to be paid in cash. So meaning, there is now really a requirement na there is a required payment. Ang hindi lang alam is ang amount and timing. So, diba, if maalala natin from previous video, anong type of liability ito? These are estimated liabilities. Okay? Those liabilities which are already in existence, however, the amount and timing still unknown. Diba? Like what we have given as an example, the premiums, the warranties. We know that there is a liability, but the amount and timing is unknown. Okay? So, klaro ba yun? So, the answer for exercise 1, letter D. Now, number 2. Which is not a characteristic of a liability. So, again, we go back to the definition on what is a liability. Diba, liability is a present obligation. Okay? So, that is letter C. Letter C is a characteristic of a liability. Okay? That requires a transfer of what? Again, per definition, an economic resource. Okay? as long as that economic resource is not a equity. Di ba? That is how we define what is a liability. That results from past transaction or event. Okay? So that means the answer for number 2, guys, that is letter B. This is not a characteristic of a liability. Although class, no, although majority or in if in general, 'di ba? In general, liability is payable in cash. However, it is not a requirement that liabilities are to be paid in cash because there are certain liabilities na pwede nating bayaran na bayaran natin siya with a non-cash asset. Okay? That is why wala ito sa definition on what is a liability. Now, what is the required payment for a liability? There is a transfer of an economic resource. Again, based on our previous discussion, when we say economic resource, these are asset or these are liability. Liability in exchange for a liability, di ba? As long na hindi siya equity. Okay, so the answer for number 2, that is letter B. Okay, so klaro yun siya ha. Next, classifying liabilities as either current or non-current help creditors assess what? Okay, so the question is, if we classify liabilities daw as either current or non-current, ano daw ang tulong nito sa mga kreditor? Okay? Remember na ang tinitingnan natin is ang creditor. Okay? So, given the choices, class, given the choices, the answer for this question is letter B. Okay? The relative risk of an entity's liability. Why? No, why? Because, one of the factor, kung ikaw ang creditor, okay, kung ikaw ang creditor, na titingnan mo kung magpapautang ka pa or hindi, is that, ano ba ang estado ng mga utang ngayon ng supposedly papautangin mo, di ba? So, when we classify liabilities as current and non-current, okay class, no? We can identify which liabilities, okay? Which liabilities are to be paid in a short period of time and for a long period of time, okay? So ngayon, kung ikaw ang creditor, titingnan mo, kaya pa kayang bayaran ng papautangin ko yung early maturing liabilities nila? How about yung mga hindi pa masyadong early or yung mga long period of time? Kaya nila? Okay? Now, not so much on profitability. Why? Because again, if you are a creditor, okay? Kung ikaw si creditor, hindi mo titingnan kung either current ba or non-current, because basically when we talk about profitability, you'll just think about how much is the interest, kasi yan yung income mo. Okay, if you are the creditor, that will be your interest income, and the term, kung ilang months or years mo ba siya babayaran. Okay, that is how you assess profitability. Okay, the degree and amount of entities liabilities, not so much, because again, you will just look at the total volume of the debtor's liability. Okay, if you want to assess the degree of an entity's liability and the amount of an entity's liability, you'll have to look at the volume of the liability. However, if you want to look at well, not all, no, but one of the factor that you need to consider if you want to assess risk is for you to look at the composition of the debtor's current or non-current liability. Ano ba sa mga utang niya ang kumbaga priority? That is your current liability. And ano yung mga hindi pa masyadong priority? That will be your non-current. Now, titingnan mo yan kung ikaw yung magpapautang kasi kung ang term na agreed nyo ngayon is for a short period of time, then sa tingin mo ang mga current liabilities niya is medyo mabigat na, then that's the time na mag-iisip ka kung kaya pa kaya ito ng borrower. Okay? Kaya pa kaya ito ng borrower? So, the answer is B. Okay? So, next. Short-term obligations are reported as non-current if, okay? So, short-term obligations are reported as non-current if. Saan daw dito yung statement na magbibigay sa atin ng idea ng short-term obligations are non-current? Now, letter A, that is not your answer because again, long-term line of credit, okay? When we talk about line of credit class, that is not yet a liability. Okay? That is not yet a liability. When we say line of credit, kumbaga, that is only a facility which is available to you na if ever na gusto mong magbaro, pwede kang magkuha dyan sa line of credit mo. Okay? Example, you have a working capital line. Okay, although not that is not in that is not usually typically in banking practice a working capital line is not long term, but let's just say example for the sake of discussing line of credit, no? Sige, iba na lang, no? So let's say yung line of credit mo, let's say you have a term loan line. Okay? So ang line of credit mo is term loan. Okay? Let's say na binigyan ka ng bangko ng term loan line, let's say 20 million. Okay? Ganito yan siya, class, no? Pag binigyan ka ng line ngayon ng bangko, let's say ito example natin 20 million, it does not mean na automatically may utang ka na. Okay? Kailan ka magkakautang? If that 20 million is availed. So meaning, when we talk about line of credit, that is only available facility. It does not mean na mayroon ka ng utang talaga. Kailan yan siya magiging utang? Once ma-availed. So, letter A, obviously, is not the answer. Okay? The entity has a tentative plan to issue long-term bonds payable. Again, no? This is only a plan. Okay? This is only a plan. Meaning, wala pa talagang klaro if that plan would push through. So, obviously, you cannot report this as a liability. Okay? Letter D. The entity has the ability to refinance on a long-term basis. Okay? Has the ability to refinance as a long-term basis. Mayroon ka lang ability. Pero, well, if we are to analyze this statement, no, this letter D, there is an existing liability na. Correct? Okay? There's an existing liability na. Maturing in the current period. Okay? There is an existing liability. Okay? That will mature in the current period. However, If that is only the case sana, then perfectly this should be short-term liability. Okay? This should be short-term liability. However, as the statement says karon, if you have daw that ability to refinance that in a long-term basis, do you classify it as non-current? The answer is, obviously, no. Why? Because again, what has been described is your ability only, no? What lacks, okay? What lacks is the agreement between you and the creditor that you will, or that the creditor has allowed you to refinance that on a long-term basis, no? So, regardless if you have the ability or not, the statement remains that it is a short-term obligation. Now, obviously, the answer is letter C. Now, why letter C? If you have been given the discretion, okay? If you have been given the discretion class, okay? That means that both the creditor and the debtor agreed, okay, with consent na kung anong gustuhin ng debtor, kahit na magmamature yung obligation niya in a short period, or kumbaga 12 months 12 months prior from the reporting period, kahit na magmamature siya ng ganun na time, if the creditor agreed that you will have the discretion, then that short-term obligation should be presented as non-current. Because again, you are free, no? You have the ability to tell the creditor na I will exercise my right to refinance it long term. Okay? So the answer is letter C. Okay? So, number 5. Which situation would not require, okay, would not require the non-current liabilities to be reported as current? Okay? Saan daw dito yung statement na magsasabi na ang long-term debt, kahit long-term siya or non-current siya, pwede siyang gawin or i-report natin as current or magiging current daw siya? Saan dyan na statement ang hindi magre-result sa ganun na situation? Okay? So, let's analyze letter A. So, when we say that the long-term debt is callable by the creditor, that means, okay, that means that although the loan or the obligation should be paid more than 1 year, if the creditor decides to call it, it becomes due and demandable. Okay? So again, ulitin ko. Statement letter A simply means that even though the obligation is non-current or long-term, if it is callable by the creditor, that means that regardless of the term, once the creditor decides to call the loan, that loan becomes due and demandable. So, if you remember our previous discussion, loan of such type, anong classification natin? That is current. Okay? That is a current liability. So, that is not the answer because the question is, would not. Okay? The creditor has the right to demand payment due to a contractual violation. Okay? The creditor has the right to demand payment due to a contractual obligation. So that means, kung baga, remember covenants, no? Remember the discussion we had with covenants, no? Diba, covenants in a layman's term, these are conditions attached to the liability or to the obligation. Now, once that conditions is violated, then that gives the right to the creditor to demand payment from the debtor. Okay? To demand payment from the debtor. So, the statement says, the creditor has gained the right to demand payment due to a contractual obligation. Now, so how do we present this type of obligation? We present it as current. So again, that is not the answer because negative definition yung hinahanap natin, no? The long-term debt matures within the upcoming year. Okay? So what does it mean? The long-term debt matures within the upcoming year. So meaning, if our reporting period is, let's say, 12/31/2019, the upcoming year is what? Obviously, 12/31/2020. So, magmamature daw siya within this period. So, anong tawag sa liability na ganyan? Current liability. Okay? Current liability. So, obviously, the answer for this is letter D. All this require the current classification. Okay? Which does not meet the definition of a liability. Okay? Does not meet the definition of a liability. So, let's look at the choices. Letter B. An obligation to provide goods or service in the future. Okay? Meaning, may obligation na tayo, legally binded, na we should provide goods or service in the future. Now, what is a classic example for this? Unearned service income. Diba? That basically, papasok dyan yung kung ano yung unearned service income. So, is that a liability? Obviously, that is a liability. A note payable with no specified maturity date. So, again, the question is, saan dito ang hindi liability? Now, ang term ginamit is note payable siya. So, obviously, what is that? That is a liability. Correct? Letter D. An obligation that is estimated in amount. There is an obligation na. However, the amount and the timing may be is not yet certain. But, there is now an obligation. So, anong tawag natin dyan? That is a liability. Okay? So, the answer for this, obviously, is letter A, no? Signing of employment contract, guys, no, does not give you, although whether fixed pa yan siya o kahit gaano pa yan siya ka-fix, does not generate a liability for the entity. Why? Because this fixed salary is still dependent if whether itong employee ba is magkatrabaho ba siya or hindi. Although there is now a contract, okay, pabayaran siya pag once na magtrabaho siya. So there is not yet an obligation. Okay, there is not yet an obligation. However, the case is different if after 1 month or within 1 month, nagtrabaho na siya, tapos hindi mo pa siya nabigyan ng sweldo, then that is a liability because you are now legally binded by the service of that certain employee. Okay? However, in this statement is signing of employment contract pa lang. So, wala pang liability. Okay? Wala pang liability. So, number 7, which is not considered, no? Very basic lang to, no? So, the answer for that is letter D. Again, ang payment natin does not necessarily mean na gagamit tayo ng current asset. What is required is that there is a present obligation, it arises from past event, then it results in a transfer of economic resource. Non-equity. Okay, non-equity. Number 8. Among the short-term obligations at year-end are 90-day notes. Renewable for another 90 days. Okay? Kumbaga, meron daw tayong at the end of the year, at the end of the reporting period, meron daw 90-day notes, meaning to be paid within 90 days. Pero, pwede siyang i-renew for another 90 days. So, anong classification natin sa notes payable? Obviously, the answer is current, no? Regardless, no, if renewable ba siya or hindi, or let's just focus on the statement, no? Renewable daw siya. Pero, 90 days lang din. So, if we add that up, that is only 180 days. So, kahit pa i-renew yan siya nila on that day, the total days would only be 180. So, that still is within what is current liability. Okay? So, klaro yan siya, ha? So, next. Number 9. If a long-term debt becomes demandable due to a violation of a loan covenant, so what happens? The debt may continue to be classified as non-current if the covenant can be renegotiated. Now, this is false, no? Why? Because although this may happen, but subject to certain conditions. Diba? If you may remember, yes, it can still be classified as non-current. However, subject to certain conditions like when is the timing of the renegotiation, diba? Because if the renegotiation happens after, okay, after the reporting period, but prior to FS issuance, then this liability is what? Current, diba? However, if the renegotiation happened before, okay, before the reporting period, then it is agreed before the reporting period, then the classification would now be non-current. So again, renegotiation statement is dependent on certain conditions pa. So this is false, no? The debt should be reclassified as current. This is the answer, class, no? The answer is letter B. Now let's look at, di ba? In general rule, di ba? In general, the first thing that we need to consider, if violations of a covenant occur from a long-term debt, automatically that becomes as a current liability because it now becomes due and demandable. However, there are certain conditions like the statement letter A states, no? it can still be long-term as long as it is renegotiated. Diba? That is why our answer, this is false because there are conditions. Okay? Cash must be reserved to pay the debt. That is not a requirement. Diba? That is not a requirement. And also, retained earnings must be restricted. That is also not a requirement if there is a violation of a covenant, diba? Based on our previous discussion. However, for conservatism's sakes, if you are the entity na alam mo na mayroon ng magiging due and demandable na liability, then it is prudent that either you may reserve cash to pay that debt or retained earnings must be restricted because you now know that the liability is due and demandable. Okay? However, that is not a requirement. Okay? But for management's sake, that is a prudent action. Okay? That is a prudent action. So the answer for this is letter B because this is automatic, no? If there is a violation of a loan covenant, then the loan becomes due and demandable. It becomes as a current asset. Okay? Number 10. A retail store receive cash and issued gift certificates that are redeemable in merchandise. How would the deferred revenue be affected by the redemption and non-redemption of certificate respectively? Okay? Now, we are talking here about certificates. Diba? Estimated liability. Okay? So now, the question is, how would it be affected by gift certificate? Okay? Ano yung treatment natin dito? Okay, ano yung treatment natin when it comes to give certificates? This becomes what? Current liabilities. Diba? We are to recognize this as a current liability. Automatic, no? Automatic. Because we already received the cash, that binds us with the obligation. Diba? That binds us with the obligation. Now, the timing is unknown. However, klaro na mayroon tayong obligation. So, the answer it would be letter A. Okay? So, next. So, let us now go with computational problems. Okay? Computational problems. So, you have been given the data. Okay? On December 31, 2020, iCare company provided the following information. Okay? There is an accounts payable, including deposits and advances from customers of 250,000 daw. Okay? Okay? Notes payable, including note payable to bank due on December 31, 2022 of 500,000. So that is the amount. We have an accounts payable of 1,250,000. We have a notes payable of 1,500,000. Then we have the share dividends payable, credit balances in customers account, serial bonds payable in semi-annual installment of 500. This is 5 million. Accrued interest on bonds payable 150. Then we have a contested BIR tax assessment. Possible obligation 300,000. Unearned rent income. So So the question is, how much is the total current liabilities daw? Okay? So let's tackle this one by one, no? Accounts payable, klaro po na current liability talaga siya, no? However, the question is, how will we treat advances from customer? Meaning, ito ng 1,250,000 kasali daw ito. So, ang question natin dito is, dapat ba itong kasali sa accounts payable or hindi? Okay? The answer for that, okay, theoretically class, no? Theoretically guys, hindi ito accounts payable. Again, let me reiterate ha. Hindi ito accounts payable. Okay? Because this does not relate or meaning this does not relate to a purchase which we did not pay. Klaro yan siya ha? So this is not an accounts payable. However, this is a liability. So, klaro yan siya na itong 250,000, this is a liability. Hindi lang siya accounts payable. So, ang question is, now, balik muna tayo. Bakit naging liability ito siya? Remember the term na ginamit is advances from customer. Meaning, nag-advance daw tayo. Okay? Nag-advance tayo. From, saan galing yung advance natin? Sa customer. Kaya, advances from customer, that is a liability account. Kasi nag-advance na tayo sa customer, wala pa tayong item na binigay. Klaro yan siya ha? Advances from. Nag-advance tayo galing sa customer. Utang natin. Kasi kumuha na tayo ng pera, wala pa tayong item na binigay. Klaro yan siya na that is a liability. Hindi siya accounts payable. Pero it is a liability. Now, what type of liability? That is a current liability. We can term this as advances from customer, no? We can have this account title advances from customer. Okay? So, but the question is, is total current liability. So, we have 1,250,000. Okay? Notes payable, okay, including note payable to bank due on December 31, 2022 of 500,000. So, meaning, itong 1,500,000 daw natin na notes payable, 500,000 dyan is mag-due December 31, 2022. Ano yung reporting period natin dito? December 31, 2020. So basically, that is 2 years. So the question is this 500,000 to be presented as current? Obviously, the answer is no. Okay? Why? This is a long-term liability. More than a year na siya from December 31, 2020. So with that, on this note payable, the only or the current portion is only how much? 1 million. Okay? Shared dividends payable. Okay? Again, let us be clear ha. Dividends payable in general is a liability. Pag ang dividends na payable are cash or property, plant, and equipment. Kung baga, if ang dividends declared is non-equity, then that becomes a liability. However, if the dividends declared are shares of stocks, it is not a liability. In this particular problem, the dividends is share. So, this is not part of our liability. Okay? Klaro yan siya ha? Not part. Credit balances in customer's account. Okay? Credit balances in customer's account. So, pag sinabi natin, class, na customer's account, which does it relate? It relates to accounts receivable. Okay? Intindihin nyo yan ha? Customer's account, it relates to accounts receivable. Account ng customer. Diba? It is opposite with supplier's account. Pag sinabi natin supplier's account, saan yan siya nagre-relay? Accounts payable. Pag customer's account, accounts receivable. So, you may ask, customer's account, ang question is current liability. Dapat ba itong kasali or hindi? Dapat, pag plain customer's account lang, the answer is yes. No. Hindi siya dapat kasali sa current liabilities natin. Because again, this is a current asset. Diba? However, these are credit balances. Ano ba ang normal balance natin sa accounts receivable? Diba debit? Ngayon ang nangyari, nagka-credit daw. So anong kayang nangyari dyan? Obviously, there was what? There was overpayment. Okay? There was overpayment. Kaya nag-credit balance. Instead na debit balance siya, which is the normal, because of the overpayment, credit balance tayo. Okay? Credit balance. So, what does it mean? Nasobra tayo ng kolekta. So, meaning, dapat natin isauli. So, may utang tayo ngayon na 200,000. Okay? Next. Serial bonds payable. Okay? Serial bonds payable. Generally speaking, class, no? Generally speaking, bonds payable, long term. Klaro yan siya, generally speaking. However, if we look at the statement, payable daw siya in semi-annual. So that means, how much? 6 months. Diba? Payable siya in 6 months. Semi-annual. Every 6 months installment. Diba? So that means to say, on December 31, 2022, or from December 31, 2020 to December 31, 2021, there is a currently maturing obligation pertaining to these bonds payable. Tama? How much is that? Kung semi-annual, magkano yung magmamature within the year? That means 2 installments. Diba? That is 2 installments. So that means, yung currently maturing natin na liability pertaining to this bond, that is 1 million. Okay, that is 1 million. Obviously, accrued interest payable, that is a current liability, accrued interest, di ba? Hindi na natin yan siya i-expound, no? Napaka-basic lang yan. Accrued interest. So, obviously, that is a current liability. Contested BIR tax assessment. So, what is this? On our previous discussion, this is contingent liability. Di ba? Stated is possible only. I-recognize natin o hindi? The answer is hindi. Diba? Dapat highly. Diba? Highly. When we say highly, more than 50%. Kung possible lang, 50-50 lang yan. Dapat highly. So, this 300,000, although it possible, 50-50 pa, hindi natin yan siya i-recognize. Diba? It does not pass on what should be considered as a contingent liability. Okay? Unearned rent income, obviously, that is a current liability. So with that, na-determine na natin. So the answer for this is 1,250,000 plus 1 million plus 200 plus 1 million plus 150 plus 100,000. That is 3,700,000. Our total current liabilities. Okay? So, klaro yan siya, ha? So, next. Okay. Total current liabilities pa rin. Okay? So, we have this. Okay? December 31, 2020 daw. So, how much is the current liabilities? Okay. Notes payable trade, this is current. Bank loans, this is current. Advances from officers, this is also current. Again, advances from officers. Nag-advance daw tayo from officer. Kumuha tayo ng pera from officer. So, that is a liability. Okay? Different if ang statement is advances to. Okay? So, now, you must remember this, the difference between the term advances to and advances from. Okay? So, pag sinabi po natin na advances to, kumuha ng pera papunta kay, that is advances to. So, anong ibig sabihin yan? Pag kumuha ng pera papunta kay, ibig sabihin tayo yung nagpahiram ng pera papunta kay, that is advances to. Okay? Pag sinabi po natin na advances from, kumuha ng pera galing kay. Diba? So, the entity made an advances from. So, ang entity kumuha ng pera galing kay. So, that means meron tayong utang. Remember that, ha? So, kumuha ng pera galing kay officer. So, meron tayong utang kay officer. So, current liability. Okay? Accounts payable, current liability. Bank overdraft. So, ano ba tong bank overdraft? Okay? Bank overdraft class, no? A classic example, di ba? I don't know if alam nyo to, but for the sake of discussion, let's just give an example. Bank overdraft, okay? Bank overdraft, nasobrahan ka ng withdraw. So, let's say, yung pera mo sa bangko, let's just say na 500,000 lang. Okay? Meron kang pera sa bangko, 100,000. Okay? Ngayon, you withdraw 510,000 because you forgot na 500,000 lang pala. So, anong nangyari nito? Meron kang negative na 10,000 over withdrawal. This over withdrawal class, this is your bank overdraft. Okay? So, again, nasubraan ka dito ng withdraw. So, anong mangyayari nito? Dapat bayaran mo yung bangko. Okay? Dapat bayaran mo ang bangko. So, that means, meron kang utang. Okay? Meron kang utang na 10,000. That is a liability. Withholding tax payable, current liability. Mortgage payable, no? Pag sinabi po nating mortgage class, mortgage payable, that is long term, no? So, hindi yan siya kasali. Okay? Hindi yan siya kasali. Income tax payable, that is current. Estimated warranty liability, again, estimated liability, that is current. Estimated damages, okay, estimated damages payable by reason of breach contract, no? Now, itong estimated damages payable, okay, hindi ito yung same type ng previous discussion natin, no? This statement, no, hindi ito same nung sinabi natin na covenant. Okay? Because, ang sinabi dito is yung damages pa lang. No? By reason of breach of contract. Okay? So, this is still to be contested pa. Okay? This is still to be contested pa. So, hindi pa yan siya natin pwede i-classify as liability. Okay, that is still to be contested. Kung baga, anong klaseng liability to? Contingent liability. So, wala pang determination if kung baga, siguro, possible na to, pero hindi pa klaro kung highly ba yung possibility. Kasi hindi pa natin alam, no? So, hindi pa to current liability. Accrued liability, that is a current liability. Okay? Estimated premiums liability, that is a current liability. Di ba? Based on our previous discussion. Claim for increase in wages, again, pending lawsuit. This is still contingent, not a current liability. Okay? Contract entered into for the construction of building. Now, you have to look at this na signing of contract pa lang kayo. Diba? Signing of contract. So, meaning, wala pang payment, ang meron lang is ang contract. Okay? So, that means, wala pang liability because contract pa lang ang na-enter. But, the case is different if meron ka ng nakuha na down payment. Because, if you have already received a down payment from the signing of contract, then, you now have an obligation which is, in general, ano yan siya? Unearned service. Kumbaga, it is synonymous with unearned service contract, no? Or unearned service income or unearned construction income. Kumbaga, ganun yung essence, no? But, in this particular case, this is still not a liability because contract pa lang yung na-enter nyo. No statement na nabigyan ka na ng down payment whatsoever. Now, balikan natin tong dividend payable, no? Let us just assume, class, no? Let us just assume na this dividend payable na sinabi dito, this is shares. Okay? This is shares. Pag shares yan siya, that is not a current liability. Klaro yan siya? However, if it is a cash dividend payable or a property dividend payable, no? That is a liability. Pero let us just assume na that is shares. Okay, kasi hindi klaro eh. So, pag shares, hindi yan siya kasali. Okay? Hindi yan siya kasali. So, how much is our current liability now? So, we have 300,000. We have 2 million. We have 500,000. We have 4 million. Then, we have 300 for the bank overdraft. Then, we have 100 for the withholding tax. Then, we have 800. Then, we have 600. Then, we have 900. 200. So, we have 9,700,000. Okay? So, next. Okay. So, the company provided the following information on December 31, 2020. So, we have accounts payable of 6,500,000. We have a note payable of 8 million. We have an interest payable of 150. We have a mortgage note payable of 2 million and a bonds payable of 4 million. The question is, how much is the total current liabilities? Okay. So, we have additional information. Okay, we have additional information. The bank notes payable daw includes 2 separate note payable to First Bank. So, this 8 million is composed of these 2 separate note payable. Okay? Composed of these 2 note payable. So, a 3 million 10% note issued on March 1, 2019, payable on demand. Interest is payable every 6 months. Okay. So, by the term, payable on demand, automatically, this 3 million, that is your current liability. Klaro yan siya, ha? A 1 year, 5 million, 11% note issued on January 2, 2020. Okay? On December 31, 2020, the entity negotiated a written agreement with the First Bank to replace the note with a 2-year, 5 million, 10% note to be issued on January 2, 2021. Now, let's analyze this. We have a 1-year note of 5 million. Okay, we have a 1-year note of 5 million issued on January 2020. So that means that this note is due on January 2, 2021. Correct? That is due on January 2, 2021. However, okay, so again, class, no, balik lang, no? Let's go back a bit, no? So if it is due on January 2, 2021, that means na, in theory, this should be presented as a current liability, di ba? Okay, that is a current liability. But the entity entered into a negotiated, the entity negotiated, okay, a written agreement with the First Bank to replace the note with a 2-year, 5 million, 10% note to be issued on January 2, 2021. So, that means that while it is true that it should be presented as a current liability, however, on the reporting date, there was a written agreement that this particular note is to be replaced with a 2-year note, 5 million, 10% to be issued on January 2, 2021. So that means na meron na tayong agreement na may extend ang term ng note. So ngayon, the point is, this 5 million is now not a current liability because prior to or on the reporting date, okay, which is December 31, 2020, there was a written agreement. No? There was a written agreement. So this is not a current liability. Okay? That is not a current current liability. Okay. Next, the 10% mortgage note. So ito, 2 million. Okay? Itong 2 million was issued on October 1, 2019 with a term of 10 years. Okay? Term of the note give the holder the right to demand immediate payment if the entity fails to make monthly interest payment within 10 days of the date the payment is due. Okay. On December 31, the entity is 3 months behind paying the required interest payment. So that means, supposedly, this 2 million, this is what? Non-current. Diba? Supposedly, that is non-current. However, there was a breach of the covenant. Ano yung breach ng covenant natin? That payment of interest should be made within 10 days from the date the payment is due. Okay? Monthly. Ang entity is 3 months behind na. So there is now a breach in the covenant. That means, this becomes due and demandable. Current liability. Okay? Current liability. Next. The bonds payable, okay? The bonds payable are 10-year, 8% bonds issued June 30, 2011. So if that is a 10-year bond class, no? Issued on June 30, okay? Issued on June 30, then that means this should mature on June 30, 2021. Diba? That should mature on June 30, 2021. Reporting period natin, December 31, 2020. So what does it makes now for the bond? Or how will we present the bonds na ngayon? It should be what? It should be current liability because now the maturity is June 30, 2021, di ba? 8 that is bonds payable, that is 4 million. Okay? 4 million. Now, so yan lang ba ang current liability natin? So after noting on the face value, no, or the face amount of the liabilities, we now consider if sakto ba na ang interest payable na nilagay sa data is only 150,000 because without a doubt that 150,000 class, diba, that is a current liability. But the question is, 150,000 lang ba? No? 150,000 lang ba? So, let's check. Okay? For this 3 million, um, for this 3 million note, which is, or which have a 10% interest, payable on demand, and is payable every 6 months. Okay? So meaning, the on the payment of interest, okay, so that would be, because interest payable every 6 months man, no? So that would be March, April, May, June, July, August. Okay? There was an interest payment on August. Okay, let's analyze, no? August 31, 2019. So ang next payment niyan is September, October, November, December, January, February. So, on February 28, 2020. Okay? So, next na naman is August 31, 2020. Diba? So, tingnan natin ulit, ha. It was issued on March 1, 2019. So, the first interest payment for this particular note is August 31, 2019. The second interest payment is February 28, 2020. The next interest payment, August 31, 2020. Now, when would be the next interest payment after this period? Because let us assume na nabayaran talaga siya dito na period. So, that would be February 28 or 29, 2020, di ba? But if you look at it, we are to report on December 31, 2020. Di ba? So that means from September 2020, October 2020, November 2020, and December 31, 2020, that is, dito na period siguro yan siya, that is 4 months. Diba? September, October, November, December. There should be accrued interest. Correct? So, if we are to compute the accrued interest for that, we have 3 million times 10% times 4 over 12. So, that means, or that is 300,000 times 10% times 4 divided by 12. Again, that is 3 million, no? It's 3 million times 10% times 4 divided by 12. So, that is, how much is this? That is 100,000. So, that is our first accrued interest class, no? 100,000 for the 3 million note. Okay? So, a 1-year 5 million note, 11% issued on January 2, 2020, on December, and then negotiated to be issued January 2, 2021, and so on. No? So, that means na for this particular note class, okay, for that particular note, March January 2, 2020. So, kailan yung interest payment niyan supposedly? That would be January 2, 2021. So, if you look at it, no? If you look at it, on December 31, 2020, we now have, okay, we now have, magbabayad tayo ng interest nito supposedly on January 2, 2021 pa. However, from January 2, 2020 to December 31, 2020, okay, meron na tayong accrued interest nito. Diba? From January 2 to December 31. So, that means, okay, now we need to consider na accrued na yung interest for 1 year. Okay, for almost 1 year, no? For discussion's sake, just consider na 1 year. Although, if we are to be precise with this, hindi to siya 1 year kasi yung interest is from January 2 to December 31. So that is a matter of, that is 1 day difference. But for the sake of discussion lang, just consider 1 year na accrued. Because that is to be paid on January 2, 2021 pa. So that means, okay, 5 million times 11%. So that is 550,000. Okay? So, meron na tayong dalawang accrued interest. Okay? So, next. The 10% mortgage note, okay, was issued on October 1, 2019 with a term of 10 years. So, again, hindi natin kailangan pang computein kung magkano yung accrue dito, or we do not need to consider how much or what is the months we have to accrue because it is already stated na 3 months siya. Diba? Na hindi daw nabayaran. So that means 10% mortgage, ito yun. So 2 million times 10% times 3 months over 12. So, magkano yan siya? 2 million times 10% times 3 divided by 12. So, that is 50,000. Accrued interest. Next. The bonds payable are 10-year 8% bonds issued on June 30. Interest is payable semi-annually on June 30 and December 31. So, walang statement na, kumbaga, no, ganito, ang interest is payable semi-annually on June 30 and December 31. Okay? So, let's just assume, class, kasi wala namang sinabi dito na hindi to nabayaran yung interest na on December 31. So, let's just assume na nabayaran talaga nila yan siya, no? So, that means na wala itong accrued interest. Okay? That means wala itong accrued interest. So, the total accrued interest that should be reported is not 150. But rather, 100,000 plus 550,000 plus 50,000. So that is 700,000 for your accrued interest payable. Okay? And last component, again, obviously, that is your 6,500,000. So we have 3 million plus 2 million plus 4 million plus 700 plus 6,500,000. We have a total current liability of 16,200,000. Okay?